halving of Bitcoin in 2024 is something that traders, speculators, and cryptocurrency aficionados are all very interested in. A halving, which happens about every 4 years, lowers the incentive for mining new blocks by half, which lowers the rate at which new Bitcoins are created. In the past, this event has caused the Bitcoin market to become more volatile and to see large price swings, which presents both chances and hazards for profit. Making the most of the halving event requires an understanding of the forces at work and the preparation of a strategic plan. Here's how the 2024 Bitcoin halving could be profitable for you. It's important to comprehend the mechanisms underlying the Bitcoin halving and its possible effects on the market before delving into investment methods. A built-in component of Bitcoin is the halving event, which gradually lowers the amount of new Bitcoins that are available for purchase in an effort to limit inflation. According to the laws of supply and demand, the scarcity of Bitcoin rises as the mining incentive declines, and if demand rises or stays the same, this could result in a price increase. Purchasing Bitcoin well in advance of the halving event and sticking onto it in the hope that this value would rise after the halving is one simple tactic. Active Bitcoin trading during the halving period can present profitable possibilities for traders with experience and a higher risk tolerance. Purchasing Bitcoin in advance of the halving and possibly selling it when prices rise after the halving are the two components of this strategy. Short-term trading techniques are another tactics used by traders to profit from rising volatility. Since the rewards for Bitcoin miners are increased, the halving directly affects them. For those with effective operations, mining can still be profitable nevertheless, given the eventual possible increase in the price of Bitcoin. Purchasing mining equipment or stock in mining firms involves substantial initial outlay of funds as well as an in-depth knowledge of the mining sector. Increase in price. Investors should be aware of the dangers and complexities associated with these products because they have the potential to magnify profits as well as losses. The larger cryptocurrency market may be indirectly impacted by the halving of Bitcoin. Significant price swings for Bitcoin have historically had an effect on altcoin markets. Occasionally encouraging investors to invest more in other cryptocurrencies is an effort to diversify their holdings or boost returns. Another tactic for investors hoping to profit from the dynamics around the Bitcoin halving is to keep an eye out for possibilities in the altcoin market, particularly in projects with solid fundamentals and room to develop. But compared to Bitcoin, the altcoin market frequently shows more risk and volatility. Lastly, investors need to get ready for whatever changes in the market dynamics that can occur in the month after the halving. Although price gains are anticipated based on past trends, the volatility of the cryptocurrency market necessitates being prepared for a range of contingencies. This entails creating exit plans, defining precise investment objectives, and keeping up with world's economic developments that may have an impact on the Bitcoin market. Effectively managing risks in the post-halving environment will require a rigorous approach to risk management along with flexibility and agility in one's investing plan. In conclusion, anyone hoping to profit from the 2024 Bitcoin halving will face a combination of chances and difficulties. There are various approaches to take into account, ranging from making direct investments in Bitcoin to investigating associated financial products and the larger cryptocurrency industry. Through intelligent and prudent planning, investors may set themselves up to potentially profit from this momentous occasion in the Bitcoin calendar.